Hello, good afternoon. This is David Soto talking to you, and today I want to talk about the ugly truth of Forex, okay? And I want to talk to you a little bit about the difficulties, okay, that come with making money on Forex, okay? And why so many people fail with Forex, okay? Number one, it's not your fault if you lose money, okay? For all intents and purposes, the Forex market is rigged, okay? Have you ever traded Forex and placed a trade to buy, for example, okay, and thinking the price will go up, and then all of a sudden, boom, it shoots down, or vice versa? You try to sell, and then the price just shoots up, and you say, what the hell just happened? You know, it's not your fault, okay? There's two parts who control the market, okay? The market supposed to be, okay, the Forex market is just a collection of people buying and selling, okay, trading for currencies, all right? But if that was the case, okay, the price would be all over the place every single day, all right? But we know this, there are support and resistance levels, okay? There are highs and lows in the market, okay? There are uptrends and downtrends, okay? Everything in the Forex market has a structure to it, okay? It has like a rhyme and reason, right? The structure is not predictable. It's predictable to an extent, but we don't know the future of what the market will do, okay? Now, the Forex market is at least the fiat currency, not crypto, but the regular fiat currencies like the euro, the US dollar, the Great British pound, etc., are all regulated by the particular governments, okay? And the US government being the largest, obviously, and the US dollar being the largest, they have a lot of pull and a lot of say in what happens in the, in the Forex market. But we all know that the US government is really run by the central bank, okay? And more importantly, the Forex market is run by all the big banks, okay? The big banks are the one that set the prices, and they're all correlated, all intertwined with the government. But at the end of the day, the banks have the biggest say in what goes on in the market, okay? Now that's one step, that's one side of the Forex, one side of the house, okay? The other side is the brokers, okay? The brokers also can control and manipulate the price as well, okay? And if you are good at trading Forex and you get to a point where you're making a lot of money every single day, the broker can detect that and force your trades to go in the opposite direction, so you begin to slowly lose all your money, okay? So it's a good idea to not put all your eggs in one basket, okay? Just kind of spread your money out across different brokers, okay? And I would recommend trading on one broker for a few days and then switch it up, change to another broker, change to this broker. Have about 3 or 4 brokers on hand that you put money into, and then you can trade a little bit on this one day, trade a little bit on that one day, like that. And that way, the brokers can detect if you're winning a lot, okay? So that's one thing. Now, to kind of prove my theory, okay, I'm going to show you some stuff on Google, okay? If I go here on Google and we just type in, I'm going to talk about the banks first, okay? And I'm going to talk about this thing called Forex Scandal, okay? Many of you have seen this before. And if we go here on Google, we just search for Forex Scandal. There's a lot of different articles, but this first one pops up here by Wikipedia, okay? We can look at this right here, okay? And it says the Forex Scandal, also known as the Forex Probe, is a financial scandal that involves a revelation and subsequent investigation that banks colluded for at least a decade to manipulate exchange rates for their own financial gain. Okay, market regulators in Asia, Switzerland, United Kingdom, and U.S. began to investigate $4.7 trillion a day market exchange and that this is reported. The Bloomberg reported in June 2013 that currency dealers or brokers have been front-running client orders and rigging the foreign exchange market, okay, by colluding with counterparts and pushing through trades before and during the 60-second windows the benchmark rates are set. The behavior occurred daily in the spot exchange foreign market, went on for at least a decade, according to currency traders. Okay, this was back in 2013. Now we're in 2021, and guess what? It still continues to this day. Okay, if you look here under investigation, that I don't want to read all of this, but basically there were 15 banks that were investigated. Okay, Barclays, Citigroup, JP Morgan, a lot of these big banks were investigated. Okay, and they wound up having to pay fines of like $371 million. Okay, FCA imposed collective fines of $1.4 billion against the 5 banks. That's a lot of money, but for the banks, that's not a lot of money. Okay, that's just a drop in the bucket. And what's interesting about this article and other articles out there, I'm not going to go through all these different articles, but what's interesting is that if the government, okay, the government fined, the UK government, the US government, different governments find these banks, caught them scamming, okay, caught them rigging the Forex market. But if the government wants to really stop them, they would shut the banks down. But they do not. They let them continue even till today. And what I think, my theory is, I have no proof, but my theory is that the government and the banks are all connected with this. Okay, and if the government gives the bank a fine of, say, $1 billion, that's a good commission for the government. Okay, all the senators, congress people, okay, all these big politicians are getting a kickback. Okay, they're getting money back from these brokers. Okay, that's how they can afford all these big mansions and fancy cars and whatnot. This regular salary for a congressperson is not that much, but yet all these lawmakers in the US, all these senators and whatnot, are millionaires. Okay, they got millions of dollars, so they get the money from somewhere. And this is a very good place for lawmakers to get money. Find a bank like this, okay, and then keep the proceeds. All right. So, like I said, I have no proof, obviously, but that's my theory. Okay, why does the government allow these banks to continue even till today? Okay, they're still rigging the market. Okay, and I see this day in and day out when I trade Forex. Okay, so I can see these prices are manipulated. Right now, the second part of the equation and why it's so difficult to trade Forex. Okay, the second part is the brokers. Okay, now how do the brokers manipulate price? Okay, well, they have special software on the back end that you do not see. Okay, now I'm not going to say this is every broker, okay, but this is many brokers, and they have a software called the Virtual Dealer plugin. Okay, VIR Dealer plugin, like this, and you can search for MT4 right here. And there are different articles, okay, about this, right? There's different articles you can read. I'm not going to go into this, but there's a video on YouTube, okay? It's a bit older. This is 2011.
Professional Forex tools
okay,
for traders
and
traders.
This video is pretty interesting.
Is your Forex broker dishonest? A quick search for the words MT4 Virtual Dealer plugin will yield a lot of results. One of them is this article about the features of the Virtual Dealer plugin and how brokers can use it to their advantage. You will learn from this document that your broker can delay your order to give you the worst possible price on your trade to pocket the difference. They can also re-quote the prices, trigger your stop losses, and increase the spreads.
So you notice here he said that the brokers, they can manipulate the price and they can trigger stop losses. Okay, that is one reason here I'd never recommend using a stop loss. And many people say, oh David, it's very dangerous not to use a stop loss. Well, everything in Forex has a risk, right? That's why we trade. Okay, we like to take risk, and with no risk there's no reward, right? So, but if you use a stop loss, I cannot say your broker will detect it or not, but there's a strong probability, a strong chance that yes, your broker will have some sort of software like the virtual dealer plugin in the back end that can detect your stop loss and force you to hit that stop loss every time. I've seen this with different brokers I've used. One in particular was Trader's Way, okay, that I used. I used to use Trader's Way on a live account, and I used to make a lot of money with them, and I started losing a lot, and I started doing some study, some individual studying, watching some trades, right? And what I did was I would place a trade. Before I would place trades and just set and forget, but then I actually sat down and just watched these trades. And I had one trade where I would place a buy trade, for example, okay, and I would put a take profit and stop loss, right? And I would watch the price go up, hit the take profit, and keep going, never close. It's supposed to be that trade automatically closes with a profit, but for whatever reason, it never did. And then eventually, a few hours later, it came back down and hit the stop loss and closed with a loss. I was so shocked. I'm like, wow. So I said, okay, I'm going to do the same thing again. And this is on a live account, but I did this again with no stop loss, take profit only. Okay, so the second trade I placed, I put the take profit in and with no stop loss, and the price went up, hit the take profit and closed with a profit. Wow, I was so shocked. And then, so okay, I think I see what's going on here. So then, just to prove my theory, I put a third trade in with both take profit and stop loss again, and this third trade went up, hit the take profit, and kept on going. It never closed. And then eventually it came back down, hit the stop loss, and closed with a loss. Okay, so I learned that do not use a stop loss. Okay, yes, it can be risky, but it's better to close your trade manually in a loss than to use a stop loss. Okay, that's number one. Now, if we look right here in this video,
you may think this sounds like some crazy internet conspiracy of a few offshore brokers, and that no reputable broker will ever run such a program, right? Well, think again. Let's go back to Google and refine our search by adding the word NFA.
This right here, the National Futures Association.
This will bring us to the National Futures Association archives. By reading this complaint against Gain Capital, also known as Forex.com, you will learn that not only they used a virtual dealer plugin to maximize their profits, they also changed the leverage on the account from 200 to 1 to 100 to 1 in order to force the liquidation of the largest losing position on their customers' accounts.
And see, this is the reason I do not use Forex.com.
They earned $150 million in 2009. We at ForexTrader.net have also been victims of the virtual.
So this website here, I mean, this YouTube video is by Forex Traders, right? .net, but this company does not exist no more. They sell you a software that can detect if your broker is using a virtual dealer plugin. So unfortunately, this does not exist no more. But from my experience, though, the demo accounts, and I know many people have witnessed this as well, I'm not the only person, but many times the demo account will be different than the live account. You will trade on a demo account and then go put money into a live account and start trading, and then all of a sudden you keep losing. You'll get really good on demo, but only lose on a live account. Why is that? Okay, so like I said, I don't have no proof, but I would suspect they're using a virtual dealer plugin or some sort of software to detect your trades, okay, and to force you to lose. Now, I'm not saying this is every broker, but what I would recommend to kind of mitigate this or minimize your level of risk with a broker doing such activities is to trade on both demo and live account at the same time. Okay, open up two different windows or two different instances of MetaTrader. Okay, open up MetaTrader in one window using a demo account, and open up MetaTrader on a live account in another window. Open up two separate instances of MetaTrader. If you don't know how to do it, I have a video showing you how to create multiple instances of MetaTrader, but it's real simple to do. But the thing is, you want to trade on both a demo and a live account. Now, if you're using an expert advisor such as my Excalibur EA, do not run it directly on a live account, because you're going to get a lot of wins and your broker can detect that. Okay, and sooner or later they're going to start forcing you to lose. Okay, but if you do use my Excalibur EA, you want to use it on a live account, run it directly on a demo account, okay, and then have all the trades copy pasted over to the live account. Okay, run it on demo and copy to the live account using a copy trade software such as provided by FX Blue, for example. Okay, there's different copy trade softwares out there, but FX Blue has a good free software that works pretty good, and I have a YouTube video showing how to do that as well. And this strategy, this copy trade strategy, can apply both to manual trading and automatic trading. Okay, either one, it really doesn't matter. But if you're doing manual trading, no need to really copy trades like that. That's kind of redundant. Okay, just a little bit overkill. All you gotta do is open up, like I said, two instances of MetaTrader, okay, and have one demo account, one live account, and manually place a trade on both, and then where you can compare, because normally the demo account you'll never have a problem with. It's only the live account. So compare your demo account and live account against one another, and you can see if your broker is doing something shady. Also, you can go to like xe.com. Watch this one. Okay, we can go to xe.com and we can see the live exchange rate for a particular currency. Okay, like this is euro. Go here to euro USD. 1 euro equals, hit convert, it's going to tell you 1.21839, right? So if we go here, just an example, I have Trader's Way pulled up here, and I have euro USD right here, and the current exchange right here, the live exchange rate is 1.21828, right? And if we go back here and refresh this, 1.21838, okay? So it's pretty darn close. It's fluctuating up and down a little bit. So, you know, by the time I refresh this, it's going to 8389. So this is slightly lower than what the live exchange rate here is showing, but not too bad. Okay, if you see a huge difference, okay, then you know. Another thing that I have seen with other brokers, and this has happened to me before, okay, is where you go to buy, for example, and the price just shoots down, and you say, well, what the hell? It's not supposed to do that. It should have been going up. Or you sell and the price just shoots up, vice versa, right? If you detect a broker is doing something shady, okay, they're forcing the price to go in the opposite direction, what you can do is, and this really only works on a live account, okay, demo account you're not going to see this, but on a live account, what you do is you place both a buy and sell trade at the same time and see what happens. Okay, and I had this on a particular broker before, I'm not going to say the name, but it's an Australian broker. But the thing is, this broker I was using, every time I'd buy, the price would go in the opposite direction, or sell, whatever. The price always went in the opposite direction. And I used them for a few months and never had any problems, and I started losing a lot. Couldn't figure out why I kept losing. And I started studying the behavior of the market. And I'm just thinking this is the way the market is. Maybe I'm doing something wrong, maybe my predictions are off. But I went and placed a buy and sell at the same time, and the price just froze. It was stuck there for like 3 or 4 hours, I think, before it finally started to move. I mean, it literally would not move. And then I went over to xe.com, like you see here, and was watching the price moving, constantly fluctuating. But on the broker, it was not moving at all. So that means the broker is using some sort of software on the back end to try and force the price to go in the opposite direction. And by me placing a buy and sell at the same time, it confused that software. It didn't know what to do. So I canceled that broker. I pulled my money out and got into another broker. Okay, so that is a big problem. Now, the broker I've been using now is called Hugo's Way. I have not really had any problems with them. I have not seen any manipulation. There are some good brokers out there, the LMFX, LiquidFX, Alpari, some good brokers that I've seen. Personally, I have not used, but many of my clients, many of my students have used those brokers and haven't had any problems with them. But there are, another thing I will point out is I've used pretty much every regulated U.S. broker, and I've had many problems with manipulation. All these, FXCM, Forex.com, and what's the other one? I forgot now. But these U.S. brokers, like I said, they're all controlled. The U.S. government is regulating them, but the U.S. government is tied to these scam banks. Okay, and if you go here, watch this. I'm going to show you something. We go here and type in FXCM mega lawsuit, if I can spell. Right, and there's a lot of articles here about FXCM. Okay, but they've been sued many times, and they've been fined by the FTC many times for rigging their market and basically scamming customers. Okay, and for all this manipulation. So it's not just the banks, it's the broker also. It's kind of a two-part scenario. So you have the banks trying to scam you, and then you got the freaking brokers trying to scam you. All right, so it's a big problem. Now, I will say that I know for a fact that Forex.com is a regulated broker, but they're also connected. I'm not sure how legally they're connected, but they are legally connected with FXCM. Okay, and they both had lawsuits. Okay, so Oanda, that's the one. Sorry, Oanda. Okay, is another one I would never trust. Okay, and you can type in Oanda lawsuits right here, right? Oanda versus Gain Capital, judge dismisses complaints. So I don't know if Oanda is tied into Forex.com or Gain Capital. You see, Gain Capital is Forex.com, but anyhow, these U.S. regulated brokers have been fined by the FTC. They have many lawsuits, mega lawsuits, and they still continue till today. Okay, and they're not being shut down at all. So the government should shut these brokers down, but they don't, because they're getting kickbacks. Okay, that's the whole reason why. Yeah, now do I have proof of that? No, because the government is not going to come out and just say, "Oh, hey, we're taking your money. We're taking your money in the form of a lawsuit or the form of a fine to the bank." They're not going to tell you that, right? But we can kind of connect the dots and see what's really going on here. So with all this said, it's difficult to make money in Forex, but you can. Okay, now how do you do it? Okay, now if we go back here to FXCM, to go back here to the MetaTrader. Okay, now I just got Trader's Way pulled up on demo account, which is excellent. Okay, for trading, for practicing. Okay, demo account is good with Trader's Way. I would never use the live account, but we have cycles. Okay, we have ups and downs in the market. Okay, now if you're using my Excalibur trend indicator, you can see all the highs and lows, right? And we have what's called, support and resistances, highs and lows, right? I'm trying to see here what's the best time frame to show you. Maybe I can zoom out a little bit. I just want to kind of give you a clear picture. Okay, this is pretty good right here. So I'm going to get a horizontal line, mark this. Okay, we have a high point here. Okay, we have a low point here. Okay, actually this high point, I could bring it up to this point here, at least right here in this picture. Okay, this is the highest high, this is the lowest low, right? In between we have other highs and lows. Now my indicator will mark the highest high and the lowest lows, but also there are other support and resistances. Okay, and if you look right here, okay, this is a support. Okay, the price dropped here, hit a support and bounced up, and then eventually that support was broken. Okay, let me zoom in a little bit so you can see this. Okay, the price dropped here, hit this support, bounced up, came down, broke. Whenever a support is broken, it becomes a resistance. Okay, just like going up an elevator, all right, or down an elevator, right? Either way. So now it broke, and then the price went up on this candle, shot up, hit that now resistance, before support, now is resistance, right? Shot down, came down, formed a support here, and bounced back up. Okay, broke that resistance now and became a support again. Okay, then it's just bobbing up and down, support resistance like that, and then eventually it broke the resistance, became a support again. You see it came down here and hit that support. Okay, as of right this very moment while I'm filming the video, that's still a support. Okay, so that is where, that is the basics of Forex. Okay, now more importantly, once you understand the basics of that, the more important part is trends, uptrends and downtrends. Okay, so, and I know I've shown this in other videos, but here's the thing: whenever you have a downtrend, you need to find a point where it's going to reverse and form an uptrend. All right, now here we see the price going up, down, like that. All right, that's normal, right? So that's good. We can put that on our side. Even if the banks want to scam us, we can see that the Forex market has structure. Okay, so we're going to use that to our advantage. All right, now when you have an uptrend like this, okay, in order to mark any trend line, you need at least 3 points to make a good trend line. Okay, now here we got one, we got several points here. Now I want to see this right here. When you have an uptrend, you're going to mark your support. Okay, so you see the price right here, this is bouncing off that support, and then it finally breaks and forms a resistance. The price shot down and back up on this one candle, hit a resistance and shot back down. When that support breaks, that's when you want to sell. When you have an uptrend, wait for the support to break and then sell. You see that had a big drop. Now now you have a downtrend. Whenever you have a downtrend, you need to find your resistance, okay, which is like this. Okay, this is pretty sharp downtrend, but again, okay, we have a resistance here like that. Okay, and when the price breaks, it comes down, hit that support, and bounce off that support. Okay, that's when you want to buy. Okay, so when you have a downtrend, mark your resistance, wait for that to break, and then buy. And again, just repeat this, just rinse and repeat. Basically, here we have an uptrend. Okay, and look at this. I mark my support. Now we have these candles that shot down for whatever reason, I don't know, but they're markers. They're telltale signs of what the market is doing. Okay, and all you gotta do is connect the dots. You have 1, 2, 3 points, 4 points really, to mark your support. So the price is going up. Look at that, and then the price breaks, and the next candle here shot up, hit the resistance, and then shot back down. That's when you want to sell, right in here. Okay, and using my Excalibur trend indicator, we want to place a sell trade here and close it on the next arrow. Okay, so whenever you get a signal to sell like this, find your support, wait for it to break, and then close it on the next arrow. Okay, and you don't have to be, if you're using a 1 hour chart like this, you don't have to be, this opened up, you would have placed this on the 25th of May and closed on the 28th. So you have about a 2-day period really between you open and close the trade. So you don't have to be checking this every hour. You know, every few hours is adequate. Okay, and then you get a signal to buy, you need to mark your resistance and wait for that. Okay, this, you look at this and you say, oh my God, where's the resistance? Well, it's like this. Okay, actually, wait. Yeah. You have a point here, point here, point there. Okay, the price broke here and then came down, hit that support, and bounced off. It kept riding down that support and then finally shot up. Okay, now you probably would buy here, the price would shoot back down a little bit, and you say, oh my God, David, you're wrong, it's not going up. But guess what, eventually it did go up. Okay, you just wait for the next red arrow and close that trade. Okay, and then when you get the red arrow, you want to draw your support. Okay, like that, from this low point coming up like that. All right, and you can see the price broke and basically hit the, you know, broke the support and made a resistance. Is not the best example right here, but that's basically what happened. Okay, the price right here actually shot back up and then shot back down, and but you would wait and close that trade on the next blue arrow. Okay, you'd have a nice profit. Yeah, the price shot down and back up, you say, oh my God, but then eventually shot back down again. Okay, and furthermore, right, here's another thing about manipulation. Okay, see the price shooting down here, you're excited and happy, and you might even want to sell when the price is shooting down, and then all of a sudden the price is shooting down, then it shoots right back up, and you say, oh crap, you can't close that trade, take a small loss, and then you see the price going up, so you decide to buy, and then all of a sudden the price shoots in the opposite direction, and you say, oh crap, I have to close another trade in a loss. If I would have just kept that first trade open and waited until I got the next arrow, I would have been a profit all along. The thing is, you just have to wait and be patient. Okay, that is another thing about the Forex market. This is not a collection of random traders trading. This is the banks and the brokers combined forcing the price to go in the opposite direction. If everybody's selling, they're going to force the price to go in the opposite direction. It's not just you, it's thousands, maybe even hundreds of thousands of people who are trading at the same time, Forex traders, and they're going to force the price to go in the opposite direction. Okay, so they can hit a lot of stop losses. Okay, that's why I don't like to use stop loss. Okay, if everybody's using a stop loss, they're going to force the price to go in the opposite direction and hit your stop loss. All right, so again, here we have a signal to buy, but we need to find a resistance, right? Because you have a downtrend, you need to find that resistance, and basically is like that. Yeah, okay, so I want to mark it like that, but it's close enough right there. Okay, so the price shot up a little bit more right here on this candle, but basically you have this resistance going down. Okay, and then eventually it breaks, and that's when you want to buy. Okay, I hope that makes sense. And then you close the trade when you get the next red arrow, which is where we are at this present point in time while I'm shooting the video. Okay, now we have a signal to sell, so we need to mark our support. Okay, like this. Okay, so right now at this present point in time, do not sell. Okay, wait until you get about 2 or 3 candles. Okay, I'm on the 1 hour chart. Wait till we have about 2 or 3 candles to break below, and then place your sell trade and close it on the next blue arrow. Make sense? Okay, so I showed you here how to find your highs and lows, mark your support and resistance, and also how to find your support and resistance using trend lines. Okay, uptrends, find your support. Downtrends, find your resistance. Okay, and wait for either of these to break, and then place your trade. Okay, but first make sure you have a red or blue arrow. Okay, that's important as well. Okay, once you place your trade, close it on the opposite color arrow, and you have a very simple strategy. And this will not matter if the banks are manipulating. Okay, because this basic structure is repeated over and over again. Okay, and it doesn't really matter the time frame so much. If you go to a 1 minute chart, okay, 1 minute chart for example, let me refresh this. Shift the chart a little bit so you can see. Yeah, here we have a downtrend. We just got an up arrow to buy, right? This high point here goes down just like that. Look at that. Okay, that's our resistance. Now, yeah, this is a 1 minute chart, so technically you could buy right now, but I would wait. I would wait at least another 15-20 minutes, see if it shoots down more, and then buy. Okay, the problem with the 1 minute chart is you get a lot of repaint. Now right now you don't see any repainting, which is good. That's excellent, but I still would wait a little bit, because you see the price right now is not really going up, is it? So I would probably wait about another 15 minutes, maybe even 20 minutes, just to see what the price is going to do. We got plenty of time to wait. Okay, you look at this signal came in at 16:30 according to the broker, and the next signal came in at 17:50, 17:55. So you're looking at about an hour and a half. So it had a big drop, which is good. You could have caught that, but hopefully the price is going to shoot back up again. Okay, we don't know, and it doesn't matter. Like I said, if you use a 15-minute chart, same concept applies. Okay, look at that. Okay, got a signal to sell. We're going to mark that resistance like that. Okay, now this candle here is above that, but I would not buy right now. I would not sell. Oh, wait a minute. Wait till you get a blue arrow and then buy. But when you have a downtrend, you want to mark your resistance. Okay, let me show you what I'm supposed to show you. you're too late to sell right now, I think. But let's see if we can find this better. Well, anyways, like that, yeah, we have a support here, support there, like that. So when this breaks below like that, that's a good time to sell. I guess you probably could sell right now and wait. And like I said, look at this. The 1 minute shows the buy. 15 minutes shows the sell. So it's more than likely it's going to be dropping. 30 minutes shows the sell. So what's going to happen is it's going to go back up a ways, okay, and then eventually drop back down. Okay, the 5 minute shows to sell. Okay, so the 1 minute shows the buy. So I wouldn't go so much by the 1 minute, but look, if you stick to like a 1 hour chart, you're fine, or even a 4 hour chart. Okay, you can stay in there for a long time. But either way, I just wanted to point out that, not trying to confuse you, but want to point out that this basic strategy will apply to any, any time frame. Okay, now here we have a support on the 4 hour chart. We don't have a red arrow yet. Okay, I'm just marking your support, but wait for the red arrow and then sell. Get the red arrow, wait for that support to break and then sell. That could take a few days, I don't know. Okay, it just takes time. Okay, I'm just showing you how to mark your support and resistances. Okay, so I hope this helps you understand the Forex a little bit better. The market is rigged. Yes, the market is manipulated by the banks and the brokers. It's a two-part problem. Okay, you, me, nobody can really fix the problem. If the government cannot fix the problem, we cannot fix the problem. Only thing we gotta do is play the game. Okay, know how the game is played. Okay, know how the market is rigged. Know how the market is manipulated. Okay, once you understand how it's manipulated, then you can use that to your advantage. All right, and yes, like here, example, this, I see this right here, this price shot down. Probably a lot of people were selling, and then the price shot back up, and you say, oh damn, crap, what happened? You know, that is very typical. Here everybody's selling, and then the price shoot back up again. All right, but you got a blue arrow there. But still, you know, there's a lot of highs and lows in the market. So we don't know the future. Right now, this price could just shoot down right now, even though everybody's buying. I don't know. We don't know the future, but we do know there are uptrends and downtrends. There are supports and resistances that will never change. Okay, because it's controlled and manipulated by the government. All right, and the big banks. Okay, you do not really see that so much in the crypto spectrum, although you will see support and resistances and trends in crypto, but not like Forex. Forex is much more structured. Okay, crypto is kind of the wild west because it's not regulated. It's not manipulated by the banks. Okay, yes, it's bad that the banks rig the prices, they manipulate, but once we learn how to use it to our advantage, it's not so bad. Okay, so anyways, I hope this gives you a little more insight about why it's so difficult to make money in Forex, but also how you still can make money in Forex if you just learn the rules, okay, and learn the structure of the market and how to use it to your advantage. So if you have any questions at all about this, or you want to discuss this with me, please feel free to reach out to me on Facebook. I'll put a link below in the description of this video for my personal Facebook. Please contact me there. Also, I'll put a link for my private Facebook group, and you can request to join my Facebook group and post any questions or comments in my Facebook group. Okay, so if you like this content, please like and subscribe to my YouTube channel as always, and just let me know how I can help you, and I really appreciate you for watching this. Thank you so much.